Good morning to all traders and welcome to our daily market insights video, provided of course to you by Orbex. My name is Stavros. Today, it seems that majors have remained somewhat unchanged on Monday's session, with the exception of course of Aussie as well as Kiwi, and that is on the back of some US yield buying following the US-Mexico trade deal. And as of course the dollar index was pretty flat. So the euro dollar ended the session above 113, okay, and this is good because that's likely to remain the case until there is a correction lower, and that could be the case if this is euro is actually moving on an impulse wave to the upside. That would complete wave two. But pound, on the other hand, pound, despite dollar's uncertainty, ended the session a little bit lower once again. And that was after the UK reported a GDP figure of minus 0.4% yesterday, and that was that came out along with a negative 3.9 manufacturing and a negative 0.4% construction output, which, if not mistaken, in SARS is some 17, 18 years low. Now, on the calendar today, we are expecting more data from the UK, okay? The average earnings, of course, and the unemployment rate and the employment change. We expect three different MPC members to speak, okay, at 2 at 12 and 1 at 1 o'clock. And then, of course, we'll have the US PPI figures from the US. So today, we are going to see what's happening with euro dollar and what's happening with pound dollar, of course, right? So on the euro dollar side, we have identified as a 1, 2, 3, 4, 5 triangle. And now we're looking at this to be actually the end of this move. We've had some very good signs of an impulse to the upside over here, and this is what's happened. Now, because we are from this first wave, wave 3 has been completed. Wave 4 is down here around 112.25 or so. And wave 5, I believe personally, we're going to see another wave up here, okay? Because for an extension, the 1.1334 or so, it's probably 400, looks a bit of a weak attempt to the upside. So we might see prices moving above that last level, and then we could be looking for prices to correct lower. So that would be wave 1 and that would be wave 2, and of course that would be an impulse, okay? So as long as we remain outside this trend line, we might have a false break in. We're still looking for this to be wave 3 of this impulse upside move, okay? So we're looking to reach at least 116, 118 in the medium term. Now, if we'll go a little bit lower on the 1 hour chart now, okay, so we have 1, 2, 3, 4, and wave 5 up here, okay? Most likely to reach around 113, 114 maybe, even because it's a good psychological level. Now, what it really validates or supports my my view on the euro dollar, despite we have these this divergence signal here, is that this wave 5, it's turning out to be a triangle, okay? So, and this triangle is missing one wave, because we have wave 1, wave 2, wave 3, wave 4, and we are expecting now wave 5. It could be truncated, but I doubt. Now, even if that was the case, sometimes we get a throwback out here. So we could see prices going to 1.14 indeed, and then correcting lower for an ABC, which is more likely not going to go below 112. In case that happened, of course, that would invalidate this as a wave 2, and we could be looking at risk breaking below 111.60 and then below 1.1115. Okay, so I'm expecting this to reoccur over here. I'm expecting another bearish signal to occur, to turn up on both or even one of the indicators. Now, down on the pound has a little bit more complicated formations here, okay? So we were on a zigzag over here, okay, A, B, C, W, X, Z, whatever you want to call it. And then this is another ABC, of course, right? So looking at this last impulse, okay, it looks like we ended a little bit shorter than I expected, because I was expecting prices to go a little bit lower to complete the wave 5. Now, because this hasn't happened, okay, and we had it seems that we have a corrective movement out of the upside. That could turn out to be an ABC, and that is going to end a little bit higher, around 129, between 128 to 129, I would say. This is a big 100 pip zone, but I would be, you know, it's easy to see where the prices are going to continue higher or break below, okay? So in case, of course, that happened, now I will move a little bit higher, then we could be possibly looking at this being wave 1, wave 2, wave 1, wave 2, wave 3, then wave 4, and wave 5. So we could be looking at prices going even below 124, if that was the case. Now, if that doesn't happen, okay, so that could turn out as a sort of double zigzag. Let me just clear this. That could turn out as some sort of double zigzag over here, okay, and from there we're looking for prices to start moving lower and then break below that low and move lower, and then you know, get a rejection over here or break even lower than that. Or the other scenario, if prices stop here, which is also likely to be the case because we have a wave 4 over here, okay, so the zone really normally prices, you know, the A corrects up to wave 4, then we'll have a correction within the correction, and then we'll have another wave for a deeper correction, wave C, that could end anywhere between 129.70 and 128. So actually the range now becomes a little bit bigger if we look at it this way, right? And from here is where we're looking for prices to start going lower. Now, in the bit shorter term, okay, we are expecting these UK data to come through anyway today, average earnings. So we are indeed in an impulse to the downside, an ABC correction, but of course this can also be seen as an impulse to the upside within the correction. So prices, I see this as a very good level because we have the 100 Fibonacci of the from the top to the bottom. Okay, this is the 38.2. If we take this last Fibonacci, we have the 50 level around that same price, right? And also, if we take the extension of this impulse to the upside, our golden extension would be around the same price. So I wouldn't be surprised. I mean, regardless of the results of the result of today, of course, I would be surprised if prices go all the way up above the 128 and then start looking for sales. Now, the RSI and the MACD support an upside move anyway, so that, of course, is to be added on the bullish side of things in regards to the scenario, of course. And from here is where I will be looking for bulls, for bears to start stepping in. Invalidation point on the upside would be the 129,700. On the downside, we would be looking at this price moving below. That could be a deeper correction, but I doubt that would be the case because if we break below that level, most likely looking at coming around here, and this is probably to become an X, and we probably are going to have a mixed, a combination, maybe a flat or a some other pattern. To give us hints for further either downside, upside, or even consolidation. So I want to thank you for being for watching for another day. If you like the video, of course, hit the like button. I would recommend, as always, that you keep an eye on our blog. It's where we'll cover the latest news, publish trading ideas, and provide all the necessary tools a trader needs.